Thank you SESI for inviting us, and thank you all for your time this evening. I'm James Creasy. I'm here to talk about the operational slant of value registration, where it's come from, some of the drivers behind value registration and the timescales. I'm then going to go on to talk about how you apply, what you can expect when you go through the application process. So there's three parts to my presentation today. So I'm going to talk about market needs, I'm going to talk about the benefits, I'm going to talk about the branding. I'm then going to go on to talking about the RICS model and how we monitor. I'm going to talk about registration fees, and then at the end we'll take any questions. Now, what I'm not going to talk about is the monitoring process, what you can expect on a visit or our common findings. Graham's here today and he's going to take any of your surveying questions about the monitoring process, what may come up on a visit, what a visit looks like, how you can best use the Red Book to protect yourself. So the International Valuation Professional Group saw the clouds on the horizon that were coming before the international financial crisis. They saw the need for valuation standards and a way to differentiate valuation standards from other standards that were available in the market, and to have a really unique product. And what value registration aimed to do is to separate itself. So there are standards, there are other standards, but what value registration does is put a wrap around a set of standards. It creates a robust set of standards that are recognised internationally, but then improves those with strong guidance and support and a monitoring regime. So in April 2009, the Valuation Professional Group put out for consultation a set of ideals as to what could be achieved through value registration for a wide consultation piece. In November 2009, the International Governing Council agreed those principles, and in October 2010, value registration was launched in the UK. In April 2011, it became mandatory for all valuers who are undertaking Red Book work or work covered by the mandatory provisions of the Red Book. In September 2011, it was launched in Europe. Value registration in Europe grew organically. We developed a European hub for all our regulatory activity. That hub now has their own valuer who covers Europe. We also have a UK surveying team that's grown and works across the UK. Different markets adopted value registration at different rates, and there was different market pull. In the Netherlands, we were asked to make it mandatory for all our ICS members, and that went mandatory in October 2013. France and Spain are also both mandatory for VR work, and we have a forecast of other countries that are going to become mandatory as well. And you can see how Ireland fits into that pattern in February 2016. Value registration has benefits, and it has benefits beyond the Red Book and beyond the valuation standards. It's this wrap that wraps around VR. What it does is it gives you a competitive advantage in the market, because you've got a badge of integrity and competence. And that badge holds value because it's trusted. It's trusted by the lenders, it's trusted by the insurers. It's trusted by the public, and it's trusted by lenders and investors. And as we move into more international markets, even if you're dealing with local financial institutions, what they're looking to do is have uniform standards so that as they go to, for instance, the international capital markets, they're able to bundle up their loans and resell them. So what they need is they need measurable standards. The valuation standards are a really important part of that. They're not the only part. Being able to assess a lender's ability to borrower's ability to pay is another important part. But this is a really important part of that jigsaw. It's also recognised by the insurers. Now, I meet all of the insurers for the UK and Ireland every 4 months. We host them at our ICS. They come to us, they tell us about concerns in the market, and then we can turn that into information, guidance, support. I work very closely with professional groups to tell professional groups about concerns in the market. I work very closely with our regulation monitoring team so that when they go out on a visit, they understand the concerns that the insurers and the lenders have, so that can then be tailored as part of the visit. And it gives the government confidence as well. We're seeing an EU-wide drive to increase valuation security. So the Mortgage Credit Directive is a key part of that. And for all of us, it gives an effective, robust check on standards. There's some branding for value registration. It looks like this. We have a brand centre, And there's some really useful information on the Brand Centre as well. So it's not just about the high resolution images that you can use on your stationery or your business cards. There are also videos there that you can embed into your own website and you're welcome to use on the benefits of valuer registration and using a registered valuer, but also on issues such as helping the client understand the difference between a survey and a valuation. We see that as a fairly common issue for complaints. So it allows you to use those videos there for your benefit, to embed into your website, to say, this is how you can help for your clients, this is what we're going to do for you, this is what you're going to get. The branding's important, of course it's important, but what's equally important is what sits behind the branding. Professional groups tailoring information, guidance and support. The online academy and professional groups working together to produce a free online training module that's available for all valuers, that's built on our experience of our monitoring regime. Having framework documents that Graham will talk through later about what you can include in your terms of engagement, what you can include in your report. Here's a framework document so that you don't have to start from scratch when looking at the Red Book for site inspection notes. All of that's available for you as a registered valuer, and of course the valuation standards themselves. Our ICS's model is to go out and understand the market, understand the concerns of the market. So we have a lender forum where we meet lenders and we listen to their concerns. We meet large firms, we go out and have large firm engagement. We meet smaller firms and SMEs through our regional engagement and events such as this, so we can hear the concerns of the market, whether it's insurance or fees or any other issues, so that we can understand the concerns of the market. And we go out and we host insurers, so we have the insurers coming to us so we can hear not only their claims experience, what does their current claims portfolio look like, what sort of areas are generating claims, but also their longer view. How do they see particular pieces of EU legislation affecting their claims portfolio? And panel managers, how's the market changing? What do they think it's going to look like going forward? How are they building a model to mitigate risk? Regulation and value registration then fits in as a really important part of that. So we go out, we've heard their concerns, they've told us what they think is important in the market. But are they valid concerns? Has an underwriter just been unlucky with 3 or 4 claims on a particular topic? Or is it actually an endemic issue that's affecting all small and medium firms or all firms that operate in a particular region or area or asset type? So what we can do is use this wrap around the standards, the value registration model, to go out into the market and say, okay, when we're on a visit, we can select files of a particular type. We can look at a particular asset type. We can ask questions around conflicts of interest. We can then assess, we can get our responses in, and then we can report back to the market. Yes, you're right, we need more guidance and support for our members in X area. We're going to produce it for you. And professional groups will then bring that out tailored to the market. Or we haven't seen an endemic issue. We've gone out, we've done a wide sampling exercise, we've done thematic monitoring, and here's our findings. So that really gives confidence to the key stakeholders in the market. And here they are, the key parts of our ICS and what we do. We're a standards organisation, and we really want to raise standards. But equally important is the guidance that wraps around those standards. Monitoring, really important part of what we do to assess the effectiveness of the standards in the market and the guidance we're producing, and enforcement. Our primary role is to bring up standards and to raise standards through guidance and monitoring. Enforcement is a really important part of what we do, but it's a very small part of what we do. It's so important because a few rogue surveyors can have a real impact on the insurance market, on your joint reputation. It only takes 1 or 2 surveyors in the market with an adverse news article to really affect your collective reputation. So robust enforcement action is not what we want to do, but it's what we must do to ensure standards remain high. And we take robust enforcement action in a small percentage of cases. So here's our monitoring model. All registered valuers will, once a year, complete an annual return. It's a questionnaire, and what that allows us to do is to group you. So we have the concern, so valuers undertaking secured lending may be higher risk. So we need to understand what work you do. So we have a short questionnaire that we ask you to do once a year. It should take 10 or 15 minutes or so, with the types of question that you would expect if you were going to group the market. What are the purposes of the valuation? So is it for probate? Is it for family? Is it for secured lending? Is it for development valuations? What type of asset do you value? How many valuations a year do you do? How many claims have you received? How many complaints? And that allows us to then, when we're planning our monitoring activity, to really focus on those members we think are higher risk. This isn't about you having a complaint and you getting a visit. This is about us identifying which group of members is at highest risk so that we can then intensively help them, provide support on a one-to-one basis through our monitoring and our visits programs. The general principle is the higher risk you are, the more likely you are to have proactive monitoring and the more intensive that monitoring will be. Conversely, the lower risk you are, the less likely you are to be selected for monitoring and the less intensive that monitoring will be. So we've got desk-based reviews. What is a desk-based review? This is us asking you for your template terms of engagement, your template report, your site note template, for us to then compare it to the Red Book and say, look, these are the areas that should be in there, and we'll give you a report at the end if pieces are missing. Our remote inspection and our site inspection, and by site inspection I mean attending your practice. We don't come out on site with you to revalue a property. This is about us going and having a look at the process on a file. Is there a clear thread between your comparables, to your terms of engagement, to the report? And you'll get a report at the end. And you'll always get a report showing this is what we think is best practice. This is what you need to do to protect yourself. Case-specific review and forensic review, these are used in the minority of cases, and this is where we have really serious concerns about a particular practice, acting far outside their area of competence, very high levels of claims, perhaps a concern about a specific allegation of fraud, and a competency assessment is where we would have a face-to-face interview with you discussing how you would value a particular property. They are particularly rare and only used in the most serious cases. So, how to join valuer registration? You don't need to take copious notes. What we've done is we have an online video with that short link that will talk you through how to join the scheme. Use your RICS details, which are common across the whole site. I would just like to quickly talk about being sponsored or non-sponsored, as it's a concept that's really important to valuer registration. If you work for an RICS regulated firm, that firm could pay your fees on your behalf, and they could provide information about firm systems and processes for all of the valuers that they sponsor to save them having to do it individually. If you don't work for an RICS regulated firm, that's fine. You can complete as an unsponsored member, and you simply go through a very similar return, asking a very similar question set, but at the end you'll be presented with a payment page. How do you get there? How do you get to the return to apply? It's very easy. It's rics.org. Go to regulation, go to the members portal, and you're there. I've just expanded the sponsored box, because if you are expected to be sponsored by your firm and it says you're not currently sponsored, please speak to the contact officer at your firm. It's really important. The moment they add you, and if they're a contact officer at an RICS regulated firm, they should know what to do, and if not, they're welcome to get in contact with us. The moment they sponsor you, which is selecting you in your employment area, that will change to a yes. So, the application process, what you'll have is a set of questions. Questions on eligibility, qualification, experience, how wide an area over which do you value, what activities do you do, and then some general information, mostly asking about whether you've been convicted of a criminal offence in the last 12 months, the sort of information you would really expect us as a regulator to know. Okay, your obligations as a valuer. What does it mean to be a registered valuer? What are you expecting of me as a registered valuer? Well, we expect you to maintain your competence for valuation work. That's really important. And to comply with the rules for the registration of schemes. They're a very short rule set. They're available there. An important part of those rules is that you have an internal complaints procedure with the opportunity for the client to have independent redress. Now what we mean is, if your client complains, you have a letter that you can give to them or a form you can give them and say, we will try and resolve your complaints in-house first. But if you can't resolve it with us, you have a choice. You can either go to court, as they do now, or there's an independent redress provider that will assess the complaint outside of the court system. Please ensure your contact details are up to date, really important, particularly your email address, and you'll be expected to complete an annual return once a year. Common registration issues for Ireland. You need to have a complaints procedure, so the form will ask you if you have a complaints procedure. If you don't, currently, there's a template one you can download. There's a link to it on the screen now. We'll send the slides around afterwards, of course, so you'll have it there as well. You need to have, the redress provider needs to be appropriate for your clients. So for business-to-business complaints, there are a selection of redress providers. SCSI have an independent redress provider, or are an independent redress provider. RICS, CEDA Europe, the Ombudsman Service Property operate in Ireland as well. Currently, there's no consumer redress provider for valuations. This is something we're working very hard with SCSI to remedy, not least because of the impact of the ADR directive, so there's a strong driver to have a consumer redress provider for valuation work, something we hope to remedy soon. In the meantime, there's an option on your form that says not practicing in approved redress area. If you make that selection, you'll be able to go through the return successfully. Approved redress providers are not a closed list. This isn't about forcing you to use SCSI or RICS as your redress provider. What we look for is a redress provider that's independent of your firm and their decisions are recognised in Irish law. If you use another redress provider that's not on the list, perhaps through another regulatory body or an independent body, please get in contact with us. As long as they meet those two criteria, we will approve them. So, my last slide on costs. If you go through as an unsponsored member, you'll be presented with a payment screen at the end. Fees are currently €170 plus VAT. And then for sponsored members, it's tiered. I appreciate it's very hard to see at the back, but we'll send this slide round as well with a link to where you can find the information on the page. So if I could ask you to hold any questions until the end for my part, I will hand over to Graham and he will kindly talk us through the valuation, visit and common findings.
Thank you.
Thank you, Graham.
Thank you. Good evening. I'm Graham Stokey, the Principal Surveyor at RICS Regulation for valuation. Hopefully I should make clear the process that surrounds VR, what it aims to do, is benefits to the members, is benefits to stakeholders, and some information regarding the inspection and monitoring regime. Cheesy title, Going for Gold. That will become clear as I hopefully become clearer as I start to work through the slides. What is value registration? It's quite simple. It's a quality assurance scheme. It's risk monitoring and management, and it ensures that members always meet and maintain the RICS Global Gold Standard for valuation. That's the measure which sets RICS members apart from other valuers. It's this combination of standards, regulation and monitoring. It's risk monitoring and quality assurance. It checks compliance with Red Book. It looks to see that you're doing what you say you're doing. Currently, there are about 14,770 members in the UK and in our worldwide regions. The scheme, as James has shown you, has gathered ground and pace in the European markets, and even in other world markets, it's becoming the default standards for accepting and for being given an instruction. We've got about just under 3,000 sponsoring firms. The scheme focuses on best practice. I hope to provide you with an overview of Red Book, VR and stakeholder impact and how these interact. We'll look at what a valuer does, what the Red Book does, how VR interacts with both, and how you as a member actually benefit from this, and why VR is relevant to our stakeholders. Red Book. What is it? It's the most globally recognised set of valuation standards. It contains mandatory professional standards and valuation practice statements. It gives best practice guidance. It's got some related commentaries giving you advice on how to comply. It's relevant to all RICS members undertaking evaluation, whether they're in a mandatory VR region or not. It's been setting valuation standards since 1976, and much as it pains me to say so, I was about when the first edition of Red Book was actually published, and that really makes me feel old. It contains global and national material, and it incorporates the international valuation standards in full. Just so we're clear on what the international valuation standards look like, I put a copy up on the screen. It was the latest edition of that had an effective date of 1st January 2014, and RICS Red Book, our professional standards 2014, are fully compliant with the international valuation standards. A mission statement for Red Book. The aim is to engender confidence in and to provide assurance to clients and recognise users alike that evaluation provided by an RICS qualified valuer anywhere in the world will be undertaken to the highest professional standards overall. In other words, there's an element of consistency. If you pick up a valuation in the UK from a firm, the one you get in Hong Kong should be identical in terms of quality and content. Red Book provides an effective framework within the rules of conduct so that users of our valuation services have confidence that a valuation from an RICS member is consistent with the IVS internationally recognised standards. As I said before, Red Book is more than just a set of standards. It comprises quality assurance and compliance, but it's not a textbook on how to prepare a valuation. For valuers, it's your best friend. Why? It's a risk management tool. You comply with the requirements of Red Book, you will reduce your risk. There are two arms to maintaining the standards. One, Red Book, a global framework of standards and high-level principles on one side, which sets our minimum standard, and on the other side, regulation, registration. Why is registration important? RICS discovered that, yes, we had this set of standards covering valuation, but we didn't actually know who within our membership was actually carrying out valuations. So we couldn't monitor them. So when VR was made mandatory in 2011, it was incumbent on anybody preparing a valuation to register to do so that RICS knew who was carrying out valuations. The second part is compliance and monitoring, and that's where my team come in. We will assess the quality of the work being done by any individual or any firm and ensure that it actually complies with the minimum standards set out in Red Book. What do valuation users want? They want an assurance that the valuer is actually competent to undertake the task that they've signed up to do, that they're independent, that they have no conflict of interest, that they will provide a readable, easily understood report, that they will comply with the professional standards set out in Red Book and IVS, the International Valuation Standards, and that they will provide a consistent level of quality. Why is VR relevant to stakeholders? Well, their view is if they appoint an RICS registered valuer, they can have confidence that they are actually working with a regulated and qualified professional who will adhere to Red Book and is committed to openness and transparency. You can't get any more open and transparent than actually being able to say, my valuation files are open to my professional body to ensure that I'm complying with their standards, that they're experts in their field, delivering, as it says on the screen, credible and high quality report work. RICS and SCSI work with the major financial stakeholders, financial institutions, banks, accountancy firms, solicitors, to ensure or to make, as far as we can, VR members the first choice for evaluation instruction. VR, when it was set up in 2010 and became mandatory in April 2011, didn't exactly have a massive approval rating. It wasn't seen as being a particularly friendly initiative. Many of our members were concerned about the implications of it. But the perception has changed, and as you can see from a couple of the comments that are on the screen, people have changed that perception. They're looking at it as being a future-proofing of their business, it's risk reduction, it's quality assurance, and it's allowing them to tighten up how they do their work, and at the same time, reduce risk. VR is about quality assurance and compliance. VR is now 5 years old, and since August 2011, we've visited over 950 firms in the UK and in our worldwide markets, reviewed well in excess of 3,000 individual members' work, and probably by this point have looked at well in excess of 8,000 case files. We've carried out an additional 2,000 desk-based reviews, and we've started to pilot and work on doing work on off-site inspections where we call in files, rather than visiting a firm unnecessarily. We have viewed what we're doing, and we've looked and said it's time for a full-scale review of all VR's functions and its operating procedures. We're looking to improve our risk profiling systems so that we can more effectively target our resources to visit those firms who present a higher risk. We're improving our regulatory toolkit. What does that mean? Well, that's how we deal with the firms, how we assess risk, how we take the process forward after a visit. Improve communication with our members and our stakeholders. That's ramp up the number of stakeholders we visit, ramp up the amount of information we get out to our members. Improve training and information output. We're already quite good at that. We do a big range of roadshow events. We do online training. As James mentioned, we have a very effective online training module, which I would recommend to any of you. It's available at rics.org. Published articles, and we're looking to put in place a lot of help sheets and guidance as part of our overall output. We're looking to establish a dedicated VR web page with all the information you could want on VR membership, a VR member manual which states out what the obligations that go with VR membership are and how to comply with those. I think that one key area that we focused on was improved stakeholder engagement to the benefit of VR members. And that is a variety of levels. That's talking to the lenders to make sure that VR members are their only choice, talking to PI insurers to ensure that they see the risk reduction benefits that VR is bringing to their market and bring more PI underwriters into the market, and as an ongoing aim, reduce the cost of that PI insurance. What's our approach? It's a risk-based selection criteria, it's professional and it's transparent, it focuses on key issues with a risk-based assessment. It's not going to look at minor defects or minor faults and make it a big thing of them. It looks at where any deficiencies provide an elevated degree of risk. We feedback with sharing of best practice, and our view is that leading into compliance is far better than enforcement. Disciplinary action for VR is always a last resort. This slide gives an idea of how we bring in information and how we use it. So, for a firm or member, we will look at the type of work they do, their valuation activity, what training provisions they have in place, complaints handling procedure, and PI provisions. Are they adequate for the work that they're doing? This filters down to the individual RICS registered valuer. Again, we will look at their valuation activity. Are they actually qualified to do the work that they say they're doing? And their own personal conduct within the rules of conduct. Are there any issues there? As an overview of the process, and this really just goes on from what James was saying, we gather in information from the firm, from the valuer, and we do a risk assessment. We review that. We will decide then what the VR touch is going to be with a particular firm. Is it going to be a desktop review, which is our lightest touch? Is it going to be a site-based investigation or maybe an off-site inspection where we're looking in slightly more detail at the files? An interview is possible. Where it says interview possible, that really loops up to that one. Because when we do that, we have an interview at the start of the visit and a close interview to discuss our findings. Where that might come in is where we've taken in information from a desktop review and there are items that we wish to discuss further with the firm. We then move over to the last stage. With every visit or every touch, there's a report issued. And then at the bottom, there's my wee grey box. Sometimes disciplinary proceedings. And what I'll do is I'll leave that in abeyance for the moment and we'll have a look at instances where disciplinary action might be appropriate or might be inevitable later in the presentation. What's a desk-based review? Well, it's a light touch. It's a questionnaire. It will look at key documents. It will ask key questions. How do you do business? Where do you do business? What types of business do you do? It will look at your key documents, terms of engagement, report, any site note templates. We will risk assess that. We'll issue a report. If at that stage we have concerns, you can be pretty certain a site visit will take place afterwards. We have a control sample which allows us to establish best practice, and we put the risk-based results into context through that control sample. What's the visit? A visit to the office is in a tiering of parts. The first part is we'll arrive at the office, we'll sit down, and we will have an interview with the contact officer or the principals of the firm. And that will be tasked with looking at how the firm does business, the firm's history, its processes, what controls it has in place, who does what do you do? Then we'll go into an assessment of files to look at Red Book compliance in terms of the global standards or national standards. We will then, at the end of the visit, give feedback at an interview on how the firm have performed. We will score the findings and issue a report. Serious cases of non-compliance will be followed up possibly by an investigation with, of course, the possibility of disciplinary action. It might be a last resort, but it's one that will be used if the circumstances are appropriate. How do firms comply? Well, I thought we would, if you take nothing away from tonight, you should look at this. These are the basic measures that can be taken in order to reduce your risk and comply with the requirements. Create an audit trail in every file. What does that mean? It means an unbroken chain of evidence from first contact to them paying the fee, with all points in between. It's you looking to have a record of the transaction and how you've actually progressed that. A file checklist in every file. Every job breaks down into key stages. Put a checklist in the file. It means that when the file is opened in 5 years' time in face of a claim, anything that should be there is there. So you've checked it off. I did that. I put that in the file. I signed it off. The terms of engagement went out on X date. They were sent by so-and-so, and the agreement to them came back in on this date. The report was sent that date. So you've got this whole cascade of information. Ensure documents comply with the minimum requirements, terms of engagement and report. Comprehensive suite of site note and information templates. 1. Put a template together for any types of inspection that you do, whether they be residential or commercial. Put in a comparable analysis sheet so that your key comparables are listed out and show how you've used that. So you then have a valuation rationale or a calculation in the file. Put it on a template. Case-specific and fully compliant templates for terms of engagement and valuation reports cut down the amount of time it takes you to produce the documents, and it also ensures that they remain compliant in every case. Where you can, have an active peer review process. That's not a formal audit process or compliance process. It's where your individual valuers critique each other's work. What better quality assurance scheme can you have than your colleagues looking at your work? The last thing you're going to want is for one of your colleagues to turn to you and say, that's substandard. Countersigned reports and check valuations should be the norm if the firm is of the size to make it appropriate, because it's the most simple form of quality assurance and fraud prevention that you can actually have. Have a process for file closure. Now, if you're a one-man band or the equivalent, maybe a couple of valuers, you're not going to have a mass of admin staff. But if you're of a reasonable size, 5, 6 valuers, and you've got administrators, secretaries, typists that are doing your work for you, if you've got one that's not afraid to challenge, make that one the file manager. He, she is the one that checks the file before archive to say that everything that should be in the file is in the file. If you've signed the file checklist to say the comps are in the file, and she open it and they're not there, I've seen managing directors of firms actually quail at having to face the secretary when they haven't done what they should have done. Proactive quality assurance. You can have all the standards and systems in the world, but if you don't ensure that they're complied with sanction for non-compliance, then they're so much waste paper. They have no effect. There must be enforcement of your firm's individual standards. Where you can, if you've got the sufficient resource to do it, appoint a compliance officer. It doesn't need to be a permanent full-time role, but you need to have someone who takes overall responsibility to ensure that the firm are doing what they say they're doing. And lastly, appoint an individual to act as the regulatory information officer. Now that sounds very highbrow. It's not. Really what you want is somebody to sit down once a week and look and check that there have been no regulatory changes, or there have been no updates to Red Book, that there are no new requirements. Now, it's a job that should, wherever you can, be a revolving role. I know how interesting Red Book is. It's a riveting read for 5 minutes. So you're really looking for people to take responsibility on a shared basis to ensure that the firm remains compliant. Can I satisfy? Now I'm going to go through a series of slides that look at the most high profile of the individual standards. As you can see up there, our most fundamental requirement is to be able to demonstrate independence and qualification for the task undertaken. So we insist, and Red Book insists, that you have a robust and formal series of conflict of interest checks. That's not opening the door and shouting down the corridor, "Has anybody looked at 23 Smith Street in the last 2 years?" That is looking at the tiered activity of the firm. It's looking at, for cross-discipline firms, have we any involvement with any of the parties to the transaction out with valuation? Do we act on a property management basis for the client who's buying this, and we're being asked to do a mortgage valuation for commercial secured lending? So you've got to look at the various ways that the firm interact with the various parties to the instruction. And that's not just the firm, it's the individual valuer as well. We're talking about both the firm and the responsible valuer. It's mandatory to record the results of those checks in the case file. And I could probably come up with the specific line, but I would just look like a geek. Include, as I say, cross-discipline and associated activity checks. Where there is a previous involvement does not necessarily mean that you're excluded from doing that valuation. You've got to make a clear declaration of your conflict status or your previous involvement status. But you've got to then manage that and put in the terms of engagement and the report, how you've managed it, and keep a record of the correspondence between you and the instructing party. Do not accept instructions on the periphery of your valuer's competence. It's too easy to push the boundaries. You have to be able to demonstrate competence and understanding for the task. Ensure the complete ability to demonstrate qualification for task. One way of doing that is keeping up-to-date CVs on file which detail what work the individual has done, any big specialist cases. So for the sake of a hotel valuer, he would keep maybe a note of the last 3 or 4 big hotels he's looked at and any task-specific training he has undertaken. That's a sample of a valuation instruction sheet. I won't go through it in any great detail. It sets out some of the key pieces of information that you should pick up when you take an instruction. And these are that one is on the SCSI website under joint SCSI RICS branding. Terms of engagement. Can I say that from a valuer, firm and risk protection piece of perspective, this is the most important of the standards to a valuer. It is your first line of defence. You will never ever hear a solicitor phone up and complain that you didn't send them terms of engagement. Because if you don't, and if you don't agree them, you make a claim far easier to progress. Terms of engagement should be comprehensive, case-specific, and agreement to them noted in the file. There should be a clear and unambiguous purpose stated, because otherwise it can be used for anything. Standard compliant content. The standards are set out in Red Book. They're the International Valuation Standards minimum requirement with 2 or 3 additional RICS requirements tacked on the end. Provide clear guidance on the extent, limitations and use of the report, because that is part of your overall protection. This is what I said I was going to do. This is what I said I wasn't going to do. Assumptions fill in the bit in the middle. Special assumptions should be clearly defined in the terms of engagement, and their potential impact and value also discussed at that stage. The scope of inspection should be clearly defined at that stage. Say what you're going to do and what you're not going to do. Failure to issue and agree compliant terms of engagement places the firm, and we've said the client here, it actually has a smaller impact on the client than it does on your stakeholder. Now, who's the stakeholder? The stakeholder's your PI insurer, because you put them at risk if you're not complying with this specific requirement. In the SCSI website, you will find a framework for creating a compliant set of terms of engagement. It's not a template and it's not intended to be used as such. And you'll see on that, it's very specifically got sample written all over it. And it's in a PDF format so that you can't just lift it. You should use this framework to create a compliant, interactive, adaptable document suitable for all the types of business and types of work that you do, so that when you actually get an instruction, it's an easy job for you to create a compliant set of terms of engagement which will protect you in the future. When we set this presentation up, I had set it on the basis of what you needed to do. And I decided with this particular section to look at what people don't do, what we still find even 4 years down the line. So I've looked at files with no site notes, the valuer admitting I produced this report from memory. I don't need site notes. I know this area like the back of my hand. Well, you might step outside tomorrow and get hit with a number 25 bus. And sure as heaven, what's going to happen is that the claim will come in that day. And your colleagues, partners, will have to try and reverse engineer the file to mount a defence of the valuation that you've prepared. We still see illegible, unstructured, insufficient site notes and other investigations of file. No comparable data on file. Or we've got a pile of comparable data that high, with no clue as to how it's been used, where it's been sourced from. It's so much, at that stage, so much waste paper, because it can't be relied on, because you're not giving any indication of how you actually produced the valuation. No valuation calculation or rationale in file. So your thinking has not been documented. You've not actually said, this is what I thought, and this was how I used the information to produce this valuation. And in a lot of cases, absolutely no linkage between the comparables and the valuation. The top one here, no attempt to document information relied on, its source or its reliability. That's where we're looking at information that you've used as a keystone to formulate your valuation. So we're looking at a lease. So we've got a lease between the landlord and the tenant. Well, I came across one case where a chap had been sued. And he'd been sued because he was given advice by the client. And that advice was a series of lease documents. What I didn't know was that the landlord and the tenant were the same person, and the leases were an absolute fairy story. He didn't make any reference to the reliability. He made no reference to where he got the information from, and he didn't say what the impact would be if that information proved to be wrong. Now, all of that sounds fine, but it cascaded into a claim from the lender, and the PI insurer was left forking out £4 million. You need in the file an audit trail. And too often there is no discernible audit trail of information in the file to support the valuation. Vaguely, the scope of inspection and the investigation don't comply with minimum requirements, particularly in relation where they're set out in detail. So if you're operating in the UK or in Ireland, you have a residential standard of inspection and reporting. Too often, this is not met. Poor file management. I did an inspection of a very high profile firm and they'd managed to lose terms of engagement, site notes. The only thing that was in the file was the report. Now, they just misfiled it, but what would they have done if a claim had come in? So your file management is quite an integral part of the process. To sum up, clear site notes and investigations, the comparable and valuation exercise are the key to substantiating the valuation in the report. They are what underpin it. And if it's not in the file, it shouldn't be in the report because it's hearsay. You're not backing it up. So that just sums up what we've been discussing. A correct and logical valuation approach adopted and recorded. Comprehensive and relevant investigations undertaken and clearly recorded. Appropriate and full comparable information in the file with a valuation rationale. Complete and legible site notes in the file. There's no point in having the site notes in the file if nobody but you can read them. Task-specific pro forma site notes used to record all aspects of the exercise. It takes a day, a couple of days, to look at how you do business and put together templates. SCSI have some sample frameworks up on the website, which will give you guidance on how to set it up for yourselves. All items relied on or stated in the report are documented in the file. Just what I said, nothing from memory. The third section is the report. And I think that's at the top quite a fair statement. If called on to defend the valuation, the first question the valuer will be asked, is the report fit for purpose? You include all elements required by the valuation standard. They're detailed out in VPS 3.1. Clear and unambiguous purpose noted, provide clear guidance on the extent, limitations and use of the report. Assumptions, special assumptions, scope of inspection, all clearly defined. Well drafted, well written, easy to understand. What does that sound like? 60% of what goes in there you've already produced. It's in your terms of engagement. The two things are mirror documents. One says, this is what I'll do. The other one says, this is what I've done and this is the result. So when you go to make up your terms of engagement and your report documents, I showed you what was up on the SCSI website for terms of engagement. Well, that in effect is it without the grid lines. And that's the start of your report. And when you put the two of them together, they're virtually identical. So when you start to sit down and look at what improvements you can make to your documentation, that's the start for your framework. That will give you the advice you need to carry it forward and make two easily read, easily produced, compliant documents. We come to VPS 4, basis of value. This is a fundamental demonstration by the valuer that he has knowledge and professional understanding, where failure undermines the whole validity of the valuation. Always ensure you use the correct basis of value, and you are required to quote the accompanying definition in both terms of engagement and the report documents. Where you're required to use a non-standard basis of value, and by that I'm trying to describe something that does not sit in Red Book, does not sit in the International Valuation Standards. Now, there are instances where you will use a basis of value which is outside that scope. What you've got to do is describe it and describe its impact on value. So if you use a different base of value from market value, you need to describe how that will impact and what impact on value it's had. Forced sale value is not one that we use anymore. We use a 90-day sale. It's a special assumption that a sale will be completed within 90 days. But in Holland, forced sale value is a statutory valuation that a bank must obtain when they do a secured lending deal. So the valuer has to describe what the impact on the value will be on that basis. Make sure you get it right. A failure to comply doesn't suggest incompetence, it earmarks incompetence and lack of understanding. Assumptions are critical to the critical importance to the validity of a valuation, and they cover the gap between the due diligence you will do and the due diligence you won't do. So there is obviously going to be gaps. There are things you won't look at. There are things you won't investigate. Assumptions fill that gap. So it is important that you clearly state what you will do, clearly state what you won't do, and this fits in the middle. It fills the gaps. Assumptions must not be generic, limited, or unconsidered. If you go to VPS 4, paragraph 2, there are really good baseline assumptions set out. In the UK Appendix 10 lists out assumptions for residential, and your own residential practice note, I think, includes those. Clear reference in the report in terms of engagement documents to both assumptions and the scope of inspection, and it has to be in both documents. It's an essential part of both documents. Special assumptions. What's the difference between an assumption and a special assumption? Anybody get an idea? No? Silence? A special assumption is something that is untrue. It deals with something that is patently false. An example of a special assumption. You have a residential property and you have to assume that it has planning permission for demolition and rebuild as a 20-storey block of flats. So what you have to do is agree that special assumption in your terms of engagement, define the special assumption clearly in the report, define the impact on value if it's proved to be unsustainable, and wherever possible, include the valuation without the special assumption. And caution should be given where, or should be exercised where you're asked to provide it without an ordinary valuation, where the special assumption would not apply. You must ask yourself, why am I being asked to do that? It doesn't make any sense. Failure to comply puts the valuer, client and stakeholder at significant risk, and you can say that for any of the points I've raised in relation to VPS 4. Demonstrate the audit trail. Now what does this mean? Right, the blue part is the decisioning process. No, am I qualified? Am I competent? Which is different. You might well be qualified, but you might not be competent for that specific task. Am I compromised? So we've answered those three and we've said we're going to take the job. That stage, there's no such thing as a non-red book valuation. Every valuation falls within the first two sections of Red Book. So PS1 and PS2 apply to any valuation that you provide, regardless of whether it's accepted under PS 1.6. You always have to issue terms of engagement, no matter whether or not it's an accepted task or not. We often get asked, what are accepted tasks? It's better to say what aren't. Red Book valuations, where the global standards apply, are generally those ones where people will make a financial decision based on your valuation. There are other valuations where that's not the case. So you really are looking at secured lending, financial reporting, tax, purchase. So we come over to here. Does Red Book apply? So you've made that decision. At that stage, the global terms apply. So you've got to comply with those 4 individual standards. Since VR has been operational over the 4-year period of it being mandatory, we've seen massive improvements, particularly in respect of conflict checks and recording of the details of those checks on file. The content of terms of engagement and report documents has improved out of all recognition. There's much more accurate use of the basis of value and getting the definition right. I don't know, I mean, I've been to, I was at a big firm a few weeks ago, and they had 3 different definitions for the same job. They just got, one referred to a 4-year-old version of Red Book. The other one quoted a version of Red Book that didn't exist. And the definitions of value were all out of date. So they'd said what they were doing, but does that not show a lack of attention to detail when you can't get even that right? So we've actually seen a big increase in that being done correctly. Improved quality of information held on file. More commonly now, when we go to visit a firm, we'll be confident that what we see in the file provides an underwrite to the valuation that's been provided. And there's better recording of the analysis of the comparables and the valuation rationale and the calculation. In the context of the fact that we've moved over to risk-targeted visits, the improvements we've seen have been very, very impressive. I said I would come back to this, my wee grey box. These are instances where disciplinary action would probably be inevitable. I've used the word unqualified. Actually, the words not competent are the more appropriate ones. It's where someone does not have the professional skills and understanding to undertake the task that they've undertaken. Undeclared, unmanaged conflict of interest. It's a breach of the rules of conduct because you're acting improperly. You're not independent. You're not in a situation where you can give independent advice to your client. And indeed, you may well have misled your client. Irresponsible approach to the valuation. That one loops up to the top line. That's not where we have any concerns that they may be fraudulent or maybe acting improperly. That's where we think they're just not competent to prepare the valuation that they've prepared. Refusal to comply with Red Book. Some firms still seem to think that it's optional. Some firms don't think it applies to them. It's not really suitable for the type of work that I do. Sorry, it's mandatory. You don't get an option. Wholesale non-compliance over a wide range of issues. That's where the general standard of work that firm is producing puts their client at risk because it's so poor and so non-compliant. Operating without PI. Suspicious activity, where we see a file where things just don't add up, that there are logic gaps. Case in point, you may look at a file and there are 4 or 5 comparables all around the 200, 250,000 mark, and you get a valuation of 350,000, 400,000, with absolutely no rationale in the file. Of course I'm going to ask questions, and of course we're going to ramp up from a VR visit to a full forensic review. We will then do what we don't do in a VR visit, which is take expert advice and challenge the valuation. So breaches of rules of conduct of the scheme, those are your membership behaviours. Continued aspirations. We want to increase the awareness of the standards, improve competence in the quality of advice given to our clients, and the accuracy of our valuations. encourage greater focus on task-specific CPD and training, create an environment to share valuation best practice. That is one of the principal reasons we have such a big control group. That's why we try to spread the net as widely as possible in order that we can see what best practice actually consists of. Through engagement with members and stakeholders, make Red Book